listen, we've seen these mini bull runs before.
Yeah.
And then the real one starts. And the meat of that is always in the year after the halving. So the fall of the halving, the fall and the winter, that's when the real part of the bull market just really gets started. But it's always the year after, like 2016 halving. You don't even get to the meat until the end of 2017, 2018.
This content is brought to you by Uphold, which is one of the top crypto platforms in the industry. I've been a user of this platform for many years, so I can vouch for them. They have 260 plus cryptocurrencies, and best of all, they are secure and safe. They have a transparency report that you can go review. They are 100% reserve. They don't commingle or lend out your funds, and they just launched an amazing new product where you can earn up to 5% APY on your USD balance. So picture this, you take profits on your crypto trades. You now have the US dollars. You can leave it on Uphold and earn a great return. And here are the key features of this product, folks. There's no lockups. You can go in and out at any time, and it is FDIC insured, folks. FDIC insured up to $2.5 million for participating funds, and there are no monthly fees. So this is a great service, and I will be leveraging this. And this product, once again, just launched. So you can check it out, folks, and earn on your profit taking that you do from your crypto trading. So incredible stuff. If you'd like to learn more about Uphold and this new great service, visit the link in the description. Welcome to the Thinking Crypto podcast. I'm your host, Tony Edward, and with me today is Dan, who's the founder of 360 Trader. Many of you may know Dan on X, tweeting a lot about the markets, chart analysis, and so forth. Dan, it's really great to have you on.
Thank you so much, Tony. I know we've been trying to get this together for a while. I'm thrilled to be here. Thank you very much for asking me. It is an absolute honor. I've seen a lot of your podcasts, and you have done some pretty ferociously big, large characters and big names. So I'm very humble. Thank you. Very happy to be here.
Yeah, for sure, Dan. And you have a plethora of experience with the markets and chart analysis. And I've used some of your analysis to make money in full transparency. So figured I got to get you on the podcast to talk about what the hell is happening now, man. Obviously, it's a bloody September, but we want to talk a bit about the macro. But before we even get there, tell us about yourself and how'd you get into trading?
Yeah, absolutely. So I cut my teeth in the .com era. Yes, I'm that old. Just turned 50 this year. I did, most people already know I did 20 years in the military. But while I was in the military, I was always working. I've always been an entrepreneur. I've always been working on my own stuff. And finances, the realm of finances caught my attention at a very young age. You remember Barnes and Nobles where they had the couches and the chairs out and all that stuff. I literally, after getting off my work day in the military, I literally would go to Barnes and Nobles. I kid you not. And for hours, hey, if you're going to put a chair there, that means I can read the books for free, right? I mean, so I would read. I'm telling you, I read literally hundreds of financial books, everything you could imagine, from things like insurance, mutual funds. I mean, all the things, you get me out of debt, all of those things. And it just grew inside of me. And then, the deeper you get, you start to get into stocks and all this other stuff. And so, that's where I really just became very involved in the world of finances. And that world is massive. I mean, it is so massive. You have global finance, and you have your nationality finances, and then you have all these other fields, and you have many, many markets that are out there. So, but I got into the stock market, began to trade there. I ran a very successful business while I was in the military called the Optimist Trader. And it was an online college, and I was basically teaching technical analysis, TA. And then on the other side, I was literally doing fundamental analysis for some hedge funds and some institutional organizations that wanted someone to go and find small cap stocks for investing or investors. And so I did a lot of that back in the early day. That's where I learned all the skills that I have from charting. And that, when you say you learn charting, that can be a very long process, because anytime you talk about technical analysis, again, that's a whole nother world of that's massive. You have your Elliott wave folks, you have your Fibonacci people, you have, I mean, any kind you can imagine, you have it. So that world in and of itself, you can't say, I'm a chartist without going further and explaining what exactly you mean by that, because every chartist is so spectacularly different in their approach and what they use. I specialize in price action and volume, what is actually happening on the ticker tape, and what is actually, because you can't just look at that. You've got to look at the activity or the volume, which is the actual the battle between the buyers and the sellers, or the buying and the selling that's going on. And then you have to put those two together, and with those two, you make your analysis. So yeah, I loved it so much. When I got out of the military, as soon as I got, I'm like, I'm never working for anybody again. 20 years of working for 500 people. I'm done with that life. And so I loved everything that I did in the military. I honor that. I loved it. I love the men and women that serve their country. But yeah, for me, this was it. And this is where I just put all my energy, effort, and it's paid off, and I love it. I love every second of it.
That's awesome.
Good or bad, up or down, you can't love half of it and not love the other half. They go together. So
Sure. So do you primarily trade crypto, or are you also doing stocks?
Yeah, so I do stocks as well. So I do legacy markets. I've done Forex. I've done commodities. I do a lot of other things. However, when you have something that's so cyclical, so readable, heavily cyclical, that, wash, rinses, and repeat, you got to pay a little bit more attention to that. Not to mention, as dangerous and as landmine as the crypto field is, no one can say that it has not been one of the greatest potential generators of generational profit that we've seen in generations.
Yeah.
Literally in generations. And so it's that opportunity, that lust for that brings the crowd in, but they don't realize that, hey, you're not going to get that. Those returns don't come without cuts, bruises, scrapes, bang ups, hacks, landmine after landmine after landmine. And most people can't stomach that. And that is why less than 20% make money in crypto markets, even though it's cyclical.
Yeah, great point.
Yeah, so I do concentrate, to answer your question, I do concentrate a lot of my efforts in the crypto world for those reasons.
And tell us about the services you offer at 360 Trader. What can folks get if they sign up with you guys?
Yeah, so absolutely. So I used to just run Twitter, my 360 Twitter. That's all I did. I did everything on there. And I got inundated with, hey, teach me how, do this, do that, set something up, blah, 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 and it was that caused me to be like, okay, let's see if we can get this done. And then, of course, I have my right-hand man, Nash, who has been with me from the beginning, who actually built and developed all the infrastructure, that is the 360 Trader. So I definitely have to give him a shout. Nash is the only other person that works with me right now. And he built all the infrastructure for all of our platforms and all the services that we provide. So we have on Twitter, we have our Twitter, but we also have our website. And on our website, we have right now our 360 trade alerts, which I call the 360 Elite. And those are my dedicated people that literally want to get knee deep and not just following the market 24/7, because it's Telegram channel based, but also have access to all of my portfolio stuff and all of my trades, my trade alerts, my entries, my stops. All of those things are packaged up in the 360 Elite. And so there's that group. We are building some other programs. Matter of fact, because of demand, we're going to be launching an inexpensive stock trading program here soon. That's getting ready to come, because we've had a lot of people asking about legacy markets, because I do trade those as well. So we're looking at that. But yeah, that's and then we have a trading course. Our traders course has it's a one-time charge, but it's lifetime access. Right now it's got like, I think 50, 55 videos. But we're getting ready to add another like 50 videos. So it grows constantly. And that's for people that want to, at their own pace, learn not just the basics of charting, but it progresses you. So you can learn the basics and then kind of move in, move up at your own pace. Talks about loss prevention, risk prevention, money management, all of those things are in there. So we have that as well for people that, while they're in trade alerts or while they're trying to trade, they can learn as well. So those are the two main pieces that we offer right now.
That's awesome. And I'll link to your Twitter profile and the website and so forth in the description so folks, you can check it out. So Dan, let's talk about the markets. Lots happening. It's a bloody September so far. Stocks are down, crypto's down. Folks are anticipating the Fed may cut rates, maybe 50 basis points and so forth. What is your outlook in the short term as well as long term?
Yes, absolutely. Short-term volatility, definitely. September is truly the month of volatility. We've been ready for that. Everyone should have been ready for that. Yeah. That's not a secret. When you look at the cycles of crypto and on an annual basis, September is that way. You can say the same thing about legacy markets. So at this point, markets are fairly cohesive. Now, they haven't always been that way. And what I want to say by that is we know legacy markets most of this year have been on a massive bull run. I'm talking Dow breaking records, NASDAQ, S&P breaking records. We got precious metals breaking records, all while everyone's yelling for the apocalypse. I remember when the war started, everyone's like, that's it. That's the end. If you go back and look at the history of war and its effect on markets, you'll see a little knee jerk, and then 80% there. I wish I had the chart with me. I can dig it up. I'll post it later. But if you go chart war and its effect on the markets, war has been bullish for the markets 80% of the time. So while you get a short-term knee jerk, and I call that retail, that's fear. Okay, fear driven. Those don't sway overall trends. Okay. Narrative is good for knee-jerk stuff. You want an example? Let's go to the last cycle, COVID. Everybody was saying, that's the end. And they weren't just talking about crypto.
Right.
This is the end of the world. This is the end of banks, the end of money, the end of jobs, the end. Half the population is going to be dead. I mean, you get the point. So that's narrative. Okay. Did you get a knee-jerk narrative then? Yeah, and it was a bad one. Way worse than we've had through this whole last year of all the crazy narrative people have been pushing. Recession fear. Oh my gosh, inflation's crazy. And all of these other wars and you name it. You would think Bitcoin would be at 15K. You would. Yeah. You would think based off all the apocalypse talk that Bitcoin would be at 15 to 20K. It's not. It just isn't. And when we go into the chart and we talk about some other things, I'll show you some other cool things that we can look at. But so when it comes to narrative is usually media sponsored, driven to create and cause, panic and fear. And then your smart money and the true market or the big players, the whales, they're buying that panic. Right. And then the real move comes. So while you pay attention and you do have short-term volatility swings, very rarely is narrative the right answer on how to play. If you played your portfolio according to narrative, you would have been out of this market at the low and watched it go crazy. And you would have been sitting on the sideline. You'd have done it through COVID. You'd have done it all this year. I can continue. I can go on and on and on. It's just not the right way to play it. So, and it's one of the reasons why I'm trying to produce more content for crypto Twitter. I already talked to you about this, but I used to, back in 2017, 2008, there was a lot more value in crypto Twitter. I mean, there was a lot more value. Yeah, you still had the garbage and the scams and all that stuff. But, and since the progression of meme coins and on and on and on, and the way that a lot of people that provide value get attacked, even if they're wrong on something. I mean, most people just got tired of posting because they got tired of the hate. Well, so I basically became mostly my Twitter turned into a sarcastic. I just became very sarcastic. But I'm reversing that now. So I want to bring more level-headed stuff that gives you something to look at. Can we look at data so we can assess narrative? You have narrative and you can panic or you can FOMO, or can we with a level head examine the data with a level head and just provide that information? Are we going to be right every time? No, nobody is. Only the market is right. The first thing any trader ever learns is the market is never wrong. It just isn't. Now, inside of that, you still have manipulation. Still have, but narrative would have taken you out of a bull market every single time. And so my goal, my agenda with Twitter is to bring more value, bring more content, and bring a level head to this thing we call crypto and the cycle. And today I know we're going to be digging in some charts. And my only desire is to not tell you whether one way is wrong, one way is right. I'm not stupid enough to disregard a bear's viewpoint. Of course, I want to view it. I'm not stupid enough to disregard a bull's viewpoint. I want to see that too. It's when they take that position and they act like that's it. That is it. There's nothing. And then they, there's that vitriol between. And I'm like, there's no reason for that, man. Let's just provide our viewpoints, provide our data, and can we have a debate that's not vitriolic in nature? Can we do that? Yeah. So my game is to just let people see stuff. And I always tell my people, once you see it, you can't unsee it. Like, it's there. So that's what I like to try to do.
So Dan, I mean, what you're saying there, I had to learn that. Go past my emotions, go past the narratives, go past what Jim Cramer is saying, go past what CNBC is saying, what the headlines are saying, and look at the charts, look at the metrics and different stats and indicators. And that was a hard lesson because I used to fall for that narrative trap and I lost money. And what was the big teacher for me was COVID, when I saw the crash and then the markets ripped. And then I'm like, what the hell is going on? How can this happen? And I realized I'm looking at the wrong data. I'm not looking at global liquidity. I'm not looking at the fundamentals and the charts. I was looking at the wrong thing.
You know what? That's brilliant. And the funny thing about that is anyone trying to provide data to show you the possible future, they are pioneers. Like, they're pioneers. Why would you attack them? No one. So there is no such thing as an expert technical analyst. This is why. When you call yourself an expert, you're always talking about the past. Always.
That's right. Yeah.
How can you be an expert on the future?
Yeah.
You can't. Yeah. All I can do is do the best assessment using historical data and then make an assessment. But when people do that, they just get absolutely annihilated, like as if, they're supposed to have this crystal ball and so on and so forth. So I laud anyone that's talking about the potential future and what might come if you're doing it with a level head, an equal playing field, and this is the key, you're willing to open up your mind to see the other side. If you're not, for me, that I don't like. I don't like that. If you're not willing to at least view. Early cycle theory is one that I looked at. It sounded great. It was a good theory, a wonderful theory. And we prepared for that potential.
Right.
Because if you did it and it was right, everybody would be left behind. Bro, everybody would have been left behind. Come on, you know what I'm talking about. And now people are like, oh, crap.
Yeah, they were calling I
could have waited for these lows and bought here. You know what I mean? You get what I'm saying. But so to just disregard a theory, a theory's not wrong until it's wrong, and the market's always right. So there's that. So yeah.
Yeah, great point. There was that left translated theory, which is right, the early theory that Bitcoin will run up faster than expected. We have a blow off top this year, but it seems to be normalizing and getting back on pace to the regular timeline, if you want to call it that.
Yes. And when I show Bitcoin's chart, and we have never seen a top or a consolidation that looks like this.
Mm,
And in my view, there's a perfectly good and brilliant reason for
mm,
it. And like you just said, in my opinion, and I will show when I do share charts, but this, you're getting to see something that was mega early. Why was it early? We have two fundamental reasons why it was early. Two, this is the first market that we've ever entered, ever, where there was very little supply of Bitcoin available.
mm,
This you can view this in on-chain data.
mm,
Usually when you get done with the bear market and you enter the bull, there's a horde of Bitcoin supply. It's like it's all been returned to the market.
mm.
That never happened. It never happened through the bear market or through the beginning of the bull market. We literally started when Bitcoin took off with almost no supply. This is the first time in history. Number two, Bitcoin spot ETFs in the anticipation.
Yeah.
So there's two fundamental reasons that have nothing to do with early cycle. Nothing. For why Bitcoin ran when it ran and hit its old all-time high, barely setting a new all-time high before its time.
Mm.
All of a sudden, all the timeline is caught back up now, baby. And guess what? Bitcoin's still above 50K.
Yeah.
Come on. I mean, and we'll look at the chart because there's some other things I want to share. But for me, Bitcoin is simply aligning itself with the normal cycles that we've seen every other time.
So would you say we are in the middle of the cycle right now? 2023, incredible run up, right? That was coming out of the bear market bottom. Maybe now we're in the middle. 2024 is the middle, so to speak. And then 2025 is that final phase to the blow off top.
I would go far enough to say we haven't even begun the real part of the cycle.
Mm.
And here's why. Everything we just experienced, that run up, some of the alts getting there, but not really getting there. We've seen it every other time. It happened after December's. After December's bear, and I have a video about this on my YouTube channel, so we can provide the link about is the cycle over, where I showed this to you. I literally review it. Even in percentage gain on Bitcoin. Bitcoin climbs from its lowly low back up to 14K and then drops right back down to 3K. Like literally. We've seen these mini bull runs before.
Yeah.
And then the real one starts. And the meat of that is always in the year after the halving. So the fall of the halving, the fall and the winter, that's when the real part of the bull market just really gets started. But it's always the year after, like 2016 halving. You don't even get to the meat until the end of 2017, 2018. Like there's some movement, but the meat is like, woo! And then go back to last one, and you don't get any of the big pushes until the year after the halving. Now it starts to move up, fall and winter, just like we're getting ready to head into after Dirty Dookie September, fall and winter. So for me, like the timeline is like, oh, we're literally back on track. And oh, we've seen all this before. There's some things we haven't seen before. We talked about that. We've never seen a top like this. We've never seen a consolidation this long.
Yeah.
At this high of a price. But again, we'll talk about that in a minute. But again, I believe that's just Bitcoin slowing down and aligning itself with the normality of the 4-year cycle. It's my view.
Yeah. And I was looking at that the other day. It absolutely looks like when you compare it, let's say you do a line graph of the previous run-ups, it absolutely looks like that. It's just pacing itself now with the previous bull market cycles. And the other day I shared on X specifically what was happening on the halving years in August and September. They look very similar, right? Just boring sideways chop, some dumps, some boring sideways chop, and not much gains. But then come Q4, a bit of parabolic moves start to happen.
Yes, you're exactly right. So I think, and that's why I just want to look at I just want to be able to have an opportunity. I do it with my elite. I've done it with them already. They've seen it. They've seen the data. And just look with a level head, just examine and be like, it always, it always feels horrible at this part of the market. Like that's the point. Like, you know what I mean? That's the point of crypto. Like, it's so volatile. It can be so nasty. It can feel so depressive. And it's about the time when everyone is ready to give up and does give up, that the train leaves the station. And here's the kicker. Because of the pain of what we just went through, most will not believe that the real cycle has begun until they're going to make Bitcoin break its old all-time high again. So what does that mean? Now they're buying the highs.
Yeah.
Like, that's how it happens every time. Everybody is so beat up and so mad and so angry and so depressed that they want the market not just to come off the lows. Now they need proof. So they're like, oh, no, it's still not enough. Oh, now it's tested. Oh, it broke the all-time high. Oh, wait, there goes the train. Oh, crap. Now I got to go buy everything. Only you sold it down here.
Yeah.
Now you're buying it up here. You don't make any money. You know, like it's that's psychology, man. That's how the market works. It's dirty. It's nasty. It's rough. It leaves everybody in the dust. I mean, I have a photo I post on Twitter with me with Band-Aids all over my face. Welcome to Twitter, man. Like, no, welcome to crypto. Excuse me. Welcome to crypto.
Yeah, it's funny how the mass psychology works, right? You have to be a contrarian, and it's kind of unplugging from the matrix. And, I mentioned earlier, I stopped looking at CNBC and reading financial news headlines, and I start looking at charts and those on-chain data and so forth. And I feel, I tried to share that with some people I know. It's still hard for them to not look at that stuff, right? But I think you got to count yourself lucky if you're able to look away from that and like unplug from the matrix, right?
Yeah. And, and if you are bearish and you think this was the end, you're out of everything. Let's just be honest. If you are a bear and you think we're going into a bear market, or let me tell you something. If that's the truth, you got a mass majority of altcoins are going to zero. It's not like they're coming off of all-time highs. Like, right. And we'll show that when we look at altcoin market cap. We never even came close to last year's ATH. Yeah. I mean, but what's funny is I see people on Twitter posting, oh, this is the end for Bitcoin and Ethereum, but these alts are getting ready to run. No, they're not.
Yeah.
You cannot preach that and say, but this basket of alts, we're going to ride them to Valhalla. No, if Ethereum is done and Bitcoin is done, your sexy altcoins, they're going lower than they are right now. And most of them are already in bear market territory again. Many never left. Many never left. And I'm not just talking about random unknown altcoins. I'm talking about blue chips, Atom, QNT. Like, these are monsters. Like, these are blue chip altcoin monsters.
Yeah.
But during that Bitcoin rally, the altcoins that ran were the new niche, hot altcoins for the most part. Like, literally RWA type stuff, AI, those things. That's not retailers. That's old school crypto folks that are jumping in the new niches. There's been no retail yet.
Right.
Like that, you can see that in volume, bro. You can see it in volume. Like, it's funny, I see people saying retail already came and went. No, they didn't. Like, what are you looking at? Look at the volume from December from 2017. The FOMO volume, the money. We didn't even come close to that. Like, you're telling me that the interest in crypto is less than it was in you're out of your mind. And then compare the volume of what we've seen already to last cycle's high. You're not even in the ballpark. Like, it's not even close to the amount of money. So if you're saying it's over, you're saying something that never really began is over. You're saying that the cycle never even got up. The charts say it in market cap, and the volume says it. Yep. It's not there.
Yeah, to your point, a lot of those blue chips, they haven't even retraced their all-time high. They nothing. Like, a little bit of
amount of bear market structure, for crying out loud. I mean, like, you know what I mean? Like, it's Algo, Atom,
Yeah.
QNT. I could go on and on. These are not little unknown nobodies. Like, these are monsters of crypto.
Mm. So, Dad, could you share your screen and show us what you're seeing on the Bitcoin chart, maybe for the short term, the midterm, and then, towards the cycle top?
Yes, absolutely. So I want to start with Bitcoin. So here you can see the last leg all the way up and the barely new all-time high of 73.5. And then we really enter this massive 6-month, basically, channel, okay? And it's a descending channel. And I want to say, if this was going upwards, like if it was inverted, if this same channel was going up, I'd be afraid. I'd be, if this was an ascending channel and I saw this, I would definitely be afraid. But here's when, people talk about, oh, distribution's happening. That's not what volume is showing, okay? And you can look at both the tops of last cycle and the top of 2017, 2018, and you can see the difference between a distributive top and one that's not being, that there's no distribution. So when you say there's a distributive top or an end of cycle top, what happens is every time you get a peak, every time, whales sell into every one of these with massive volume. They're selling every peak.
Right.
But they don't leave liquidity behind. They don't leave it behind. Eventually, one of these would have come up and grabbed liquidity, but I want you to see how perfectly layered. Look how perfectly layered this is. There is billions of dollars in liquidity right here. Untouched. Untouched. Okay? And instead of getting massive spikes of volume into these tops, it's not there. If you go look at last cycle's top, and I'll roll back to that one in a minute, but it's not there. So you would have, yes, this is called profit taking. And as a matter of fact, when you get a pullback, and it's funny because I've seen somebody show this and then go, ooh, look, it's over. Okay. If you go look at pullbacks and retracements, you want them to have descending volume. I'm going to say that again. When you get pullbacks in massive trends or in markets that are not finished, you want your volume descending, okay? But what I want to show you here is that's really not what's happening here. While this is pulling back, what you get is you get kind of your pullback here where volume descends. And then it levels off. It doesn't distribute. Like, you should see massive. Let me get another arrow since mine are in use. All my arrows are in use. All right. So if this is distribution, okay, mass selling by whales and institutions, and you want to, and somebody, I need to point this out. This is very important. Somebody used a BitMEX chart to prove volume, or one of those other ones, and I looked it up. So this old exchange of charts used to be in the top 5 exchanges. It used to be like highly used. It's now ranked number 16. That means nobody's using it. Like, they have far less trading volume going on there. But somebody was trying to prove cycle top off of an unused exchange and showing the volume. Well, the reason the volume's low is because nobody's using that exchange. You need to be using like Coinbase or even the index chart for Bitcoin dollar to get a better picture. Where is most of the volume occurring? Use those exchanges. So you could go to CoinMarketCap, find the top 3 exchange volumes. You'll see Coinbase, you'll see you'll see whatever you see, those are the ones you want to use. Binance for certain things, whatever the case may be. But those are the ones you want to use to do a volume analysis. So I just gave you like a little secret. It really shouldn't be a secret. It should be common sense, right? Yeah. If I want to do a price action study, I want to go to where all the volume is being traded on this so I can get a real assessment. But anyway, that's neither here nor there. So really what you have is, this is your profit taking right here. There it is, descending volume. You're going to have the most on the first high. Normal. We've seen it every cycle. Every time Bitcoin has hit its previous cycle high, there's a massive pullback, bro. It's going to happen. Why? Because people are going to take profits there.
Yeah.
But there is no representation of institutional dumping. There's no representation of whales distributing in mass. It's not there. And by the way, this right here with that big wick, people might look at that and go, oh, look at all that selling. Well, that's not all selling. And by the way, this was a global liquidity event.
Right.
So you got to know what you're saying. You can't just talk crap about a chart and be like, look at everybody was selling Bitcoin here. Oh my gosh, look at that volume. That was institutional dumping. No, it wasn't. This was a liquidation event. Was there some spot selling in there? Yeah, it was mediocre, man. This was all leverage, bro. Yeah. Like this is what I'm saying. People just talk. Why? Because they're coloring book chartists. Like they can't explain. So they look at, ooh, look, one bump, two bumps. Oh, there's three bumps. Ooh, maybe that's a head and shoulders. Oh no, there's four bumps. And they're calling top. We've never go look at the other cycle tops. I'm gonna go show you one. So one of the reasons why I don't think we're done, our institutions and whales so dumb that they're gonna leave all this liquidity here. Also, and I've issued this challenge, go through my Twitter. Show me in volume the distribution. Show it to me. You can't do it. Because it should be massive at each one of these rallies. Because that's what they do end of cycle.
Right.
They sell. Then they entice you to buy. And so you buy this. Boom! They unload on you. They entice you to buy. But they actually push price up here. Yeah. And remove all this liquidity, bro. Then they tank that sucker. Now you got a problem. Because you have high volume in each rally. But here you have a normal pullback with very good profit taking, normal pullback volume, and all of a sudden you have levity. And guess what on-chain says? On-chain will tell you that there has been nothing but accumulation going on in here.
Yeah, I just spoke to the
yes, sir.
Yeah, I just spoke to the folks at Sentiment about this, and the wallets with like 10 and greater Bitcoin, even 100 and greater, are increasing.
And you know, but people point to the ETFs, outflows, inflows, outflows. It's narrative, man.
Yeah.
Every time there's a drop, there's going to be outflows, dude. Like every time there's a rally, there's inflows. So it's not enough. Like you have to look at the total package of volume, and you're just not seeing end of cycle distribution. Also, they left all that liquidity up high. Let's go take a look at last cycle. Volume on this is even more pronounced on Coinbase, by the way, for this. But index, we'll use the index. It's still there. You can still see it. So what I want to point out here is this. This was actually your FOMO volume. If you remember, you'll say, well, why didn't we get that here? Why didn't we get this here for this leg right here? Well, because if you remember why that occurred because of one announcement, and it was a white swan.
Yeah.
If you remember what that white swan was?
Elon Musk.
Boom, baby. Tesla.
Yeah.
Adding Bitcoin to its list, and we have a 10K candle in a day. So this was not FOMO retail driven, but, and I did a whole article on this, even the whales weren't expecting this. The whales wanted to build up down here. You understand what I'm saying? But so immediately now you see a literal true to form Wyckoff distribution. And look, bang, liquidity removed. This one removes the liquidity. These are getting sold into. Bang, removes the liquidity from here and leaves none behind on this one. And then the final tank. And you can see, and it's way more pronounced on Coinbase, you can actually see the distribution occurring into these tops. It's there. It's massive. It's not like a straight line like we have right now. Like it's pretty significant. By the way, like I said, this is even more pronounced on Coinbase. You go to Coinbase, you'll see distribution like crazy. It's there. Top, no liquidity left behind. If they left behind, it's tiny, tiny amount here. Tiny, like minuscule. They grabbed all of this one here, enticed people to buy again, and then grabbed all this and sold into this rally, grabbing all this liquidity pushed down, and then it was all gone. All that liquidity is gone. So there was no need to come back up here. They did their final tank. You could, by the way, you can do the same with December because there's actually, it looks like one peak. There's actually two peaks there in December. I'm not going to do that here because I don't want to waste any more time. I just want to show you, you know, when you're talking about end of cycle, if you're saying this is the end of cycle, the data of whales and institutions and smart money doesn't align with it.
Right.
The way the top looks, leaving there's no distributed volume. It doesn't align with it. And cycle timeline says no. Like cycle timeline says it's not. And by the way, we've seen rallies like this before.
It's this great insight.
Like again, Bitcoin, come on. 2017, Bitcoin drops to lower than 6K. And we get this weird mini bull market of 14K, and everybody's like, the bull market's here! Woo! Even altcoins did what they did this time. They never went parabolic or went crazy, but they did that. Even they made gains. And then everybody's like, the bull market's back. Nope. It dropped back down, and then along with cycle, here comes the fall, winter, and then the next year, now we get our real move. So it's there. It's right in front of you. Yeah.
It's great insights, man. And I have to say, I honestly have not looked as much at the volume metric, and this is very eye-opening for me. This is something, you know, you learn, right, as you go, and this is really great that I need to pay attention more to that metric.
Yeah, otherwise it'd be like me giving you a comic book and removing every other page. If all you are is these bars up top, and you cannot, and most people think they're reading volume, but they don't know how to read it. So they'll see a big red volume bar and go, oh, look at all that selling. Well, is it though? Let's look at the candle. How much of that is wick? How much of that came off of a demand area? Because that means a large portion of your red volume bar is actually buying. It's buyers. So it's not as easy as 1, 2, 3. And I teach my chartists. Some of my chartists do this. Turn all of your volume bars gray. Don't give them a color. Because now you have to take that volume to see, hey, there's activity here, but read it with the price bar and say how much is buying, how much is selling. You're not just going, ooh, red volume, green volume, red volume. And a lot of people love that technique, that tactic. But there's a little something for you.
So Dan, we're expecting Q4, a rally as we have seen historically, the seasonality, possibly some additional liquidity injections. We see global M2s breaking out, right? What are you anticipating for 2025 as far as a potential price top? And I know this is a hard question, but just curious. Are we topping out the middle of 2025, or you think we're going towards the end?
Yeah, that's a great question. Oh, So the exchange that was being used, by the way, because I couldn't remember, was Bitstamp.
Oh, Bitstamp.
I have a Bitstamp chart for Bitcoin, but I only use it to set up a different price action scheme with different things, a different viewpoint. But I don't use it for a volume analysis because Bitstamp used to be in the top, I think, 5 exchanges back in 2017. And then you see the volume go.
Yeah.
Why did it go? It went because nobody's using it.
Right.
It's ranked 16, but somebody was using it to validate an analysis on volume. And I'm like, no, horrible mistake. That's just a horrible mistake. But anyway, so I wanted to make that clear. Okay, so and we talked about that volume, that we haven't seen. And I want to show you this because it's once you see it, you can't unsee it, bro. Like you just can't. All right. That's what I'm looking for. That's called FOMO volume. That's called the masses. That's called the meat of the run. That doesn't occur until post right before and around the ATH. And post and through that last piece. Now, watch this. Where is it?
Yeah.
It doesn't exist. It doesn't even exist in what we've seen. It's not there.
Yep.
It's not there. So if you're saying the cycle's over, we haven't even had a cycle. and then all of this, so there's multiple things that back up this thesis and this analysis. One of which is, let me see if I can get this up. This is going to blow your mind. But yeah, like I said, man, once you see it, you can't unsee it, bro.
Yeah. Yeah. Where's the volume? Yeah.
Uh-huh. Where is it? This is all we got. Look at where it is with that's why I said normal. Look at the happening. Look at the activity. That's all we've gotten. We're like in here right now.
Wow.
This is what I mean. This is how you do assessments. You don't just look, you don't just go, oh, look at that. Oh, and look at that. Oh, that's a top. Oh, short term, yeah. Yeah, short term. End of cycle? I don't think so. I think not. Why? Because of all the other data that we have. All the other data that we have. You would literally be telling me that we're not even come close.
And I think that's
of FOMO that's going to come into this market.
And to your point, like I feel like they're not able to delineate between the micro and the macro, like the short term and the long term, and they get confused. Like you said, oh, look what's happening on the chart, but okay, zoom out. Where are we in the cycle? Where, like you said, the volume it doesn't appear like it did in the past bull market cycles, and plus the on-chain data, these things don't add up to this being the top.
They don't, and this required this much volume to reach these levels. Once those levels have been achieved, and here's your money now. We still didn't even hit last cycle's ATH. And by the way, most of this was due to Bitcoin, not altcoins. And how do we know that? Well, because we have this. This is altcoins. Same chart, but altcoins. Not even in the ballpark of last cycle. And by the way, where is it?
Yeah.
Where is it? No, all you got so far is this. That's it. Which it should be more than this. And I anticipate this to be more than this. Right over here. In line with the cycle. I mean, it just, when you look at everything from a macro viewpoint with a level head, like show me the money. Like where's the money? If you're saying this is the end, you're saying the cycle's over, you're saying mass distribution is occurring, like show that to me. Like show it to me on a legit chart, like not on Bitstamp. Like show it to me. Show me what you're seeing. But for me, like even here, for me, this is a pullback, man. It's corrective. It's corrective. But for crying out loud, like that's normal. I mean, it just is. It's normal. So looking at those, and I got to show you one other thing. Like that. This is what I mean by having all of like being able to look at everything. You know, instead of just going, oh, look, we have a roundy bump and a roundy bump. Guys, it's over. We got a roundy bump. Okay. But that's what people are trying to push out there on Twitter. Literally, no one's saying why. So, or they're preaching narrative, which I get. I get. I'd rather you do the narrative thing and say the apocalypse is here, end of the world. Because if that's the case, nobody's going to care about this anyway. So,
right.
You know, I mean, come on.
Exactly.
You know what I mean? So anyway, but the other chart that is very important is this bad boy. Yes. And this is the relationship of Ethereum to Bitcoin, and something else that has not occurred that occurs every time. So this is the relationship of Ethereum as compared to Bitcoin. What does that mean? All that means is this shows how much they're either trading against each other or they're moving in unison. All right. So when there's disparity, one is way stronger against the other. When there's parity, then more often they move together. Does that make sense? That's the like simplest. There's more to it, but that's the simplest way I can describe this. And you can see that over history, what is happening. Check it. Ah, wow. You can see that for 3 cycles, including this one, Ethereum is beginning to achieve what with Bitcoin? Parity. Because now, more often than ever, they move more in unison than they ever have. That being said, though, there's still plenty of room for the flip to switch, the switch to flip, the switch to flip that hasn't occurred. Look, Bitcoin rules the show. Boom, Ethereum rules the show. Crazy, crazy, crazy. Bitcoin is ruling the show because this is Ethereum to Bitcoin. Look at the happening. Look. Look. Boom! Ethereum and alts. Ethereum and alts. Ethereum and alts. Has not occurred yet. So for you to say the cycle's over, you have to say it never occurred.
Right.
This proves it. Your alts swing from the pendulum of Ethereum. I don't care how much you hate it, how much you despise it, how much you don't like. It doesn't matter. The birds and the bees, it doesn't matter. There is room. Now, this ain't going to go up here anymore. I believe the future of Bitcoin and Ethereum is to continue to achieve parity. But we're going to at least get that, and that's all we need.
This is great insight, man.
Here is coming. It is coming. It's in the works. Because we have not had that at all. It has been all Bitcoin. And we explain why it's been all Bitcoin, not because of early cycle theory, but because Bitcoin entered a bull market with hardly any supply and Bitcoin spot ETF shenanigans. It's that simple. That is the only reason Bitcoin did as spectacular as it did.
Yeah, that's what I've been telling people. Yeah, the run up that we had that was so fast. It put us ahead of the cycle. People were floating the left translated cycle, right? But it was the ETF buying, to your point, the supply as well. So to put all those things in context, man, that's really, really great insights. And now I'm looking at the volume metric a lot different now. So it's very insightful for me.
Oh, yeah, great. Yeah. It just doesn't dawn on people, you know, it literally is not, it's not a small part of the story. It's half the story. Like it'll tell you how significant is the selling pressure. Like you've got to know, is this a pullback? Is it a correction? Oh, is it the end? You know, and that comes with a lot more than I've got 2 humps right here. Okay. Can it be a temporary top? Yeah. Of course it can. Absolutely. Is it the end of the cycle? I'd have to say no based on everything I've just laid out before you.
Dan, not financial advice. What do you think Bitcoin might hit this market cycle? And
Yeah.
are you anticipating a blow off top like Q1 2025, Q2? What are you thinking?
Yeah, golly, that remains to be seen. And anyone relying or depending on that information is screwed.
Yeah. By the
For
way, yeah, not
me,
financial advice. Yeah,
do I think Bitcoin can get 120, 140, 150?
yeah.
I think in a world of the supply nature that we live in, there's a shot at higher, quarter mil maybe. There's a shot. But for me, it's going to be about watching that FOMO money because once you see it, you can't unsee it. It's there. And so when I start to see that pressure or that FOMO, that retail, where all that hype and excitement begins to creep that volume up, those are going to be red alerts. And those type of red alerts would lead me to, no matter where Bitcoin's at, would then lead me to start playing with stops and start skimming some off the table. So, you want to start pulling 25% of your Bitcoin. The rest you want to start managing with stops because you don't want to see that volume and be like, and let's say Bitcoin's at 125 and FOMO volume is there. You don't want to be the idiot saying this is going to 500K.
Yeah.
Because listen, FOMO volume is unsustainable.
Yeah.
Parabolic volume, FOMO volume, mass volume, like we see every cycle. Doesn't matter whether it's a blow off top or a four-headed monster or a shoulder pre-Elon white swan. Once you see it, you start taking action. So I'm more inclined to follow the money, not the price. I do think Bitcoin hits 125K. I don't care if it does or not, because I will make my decisions off of volume and market cap, because the same volume that you're going to see in Bitcoin is you're going to see it on Ethereum. Guess where else you're going to see it? Market cap. I just showed it to you. Not once. It's literally there in every cycle. And if you say we're done, dude, we didn't even come close to 2017, bro.
Yeah.
Not even remotely close in money. So I have a hard time believing that we're going to do less than when crypto was a scam.
For sure. And I wonder, Dan, to your point, if we might see what will be the white swan this cycle, because maybe it's Trump, maybe it's crypto regulations, right? Because you have politicians supporting crypto now, BlackRock, all these guys on Wall Street here. I wonder if there is going to be a white swan like the Elon Musk situation.
It's hard to say, because even like businesses buying, like we consistently get that now almost weekly. Every time I see it, I'm like, this is getting bigger.
Yeah.
Like nations buying. We've got banks we have banks calling miners.
Yeah.
Like they're not even going to the exchange. They're like, hey, bro, there's no supply out here. What do you got? What can we do? Like, the CEO of one of the biggest mining companies said, look, banks are calling us.
Mm-hmm.
Okay, well, they're not calling you to sell their Bitcoin. They're calling because they want what you're mining before you put it out on the table for everybody else.
Right.
You got miner companies buying Bitcoin on the open market? What? Like, by the droves. This is another we're in a new era, man. A new era. And I do not want to get into extended cycle theory. Right. I do not want to get into any of that. But the dynamics of what is really happening below the surface, bro, it's people want it, man. They want it. They want it. They want it. They want it. Do they want you to have it as a retailer? No. Heck no.
They want you to buy that top, right?
Yeah, and as painful as it is, look, we either wait and ride it, or the apocalypse comes and nobody cares.
Yeah.
What are you going to do? Like, you are in the best potential niche for generational profits. Absolutely. If all the world goes to hell in a handbasket, this is going to be the last thing on your mind, So
exactly. Not financial advice. curious, what are your price predictions? Because I know you had tweeted about XRP, like possibly $4 to $7 or something like that.
Yeah.
What are your price predictions for ETH, Solana, and XRP, if you can share those?
Yeah, absolutely. Ethereum, 10K for sure. I think we get 15.
Mm,
Mind blowing would be 20. Again, I would not be counting on price points.
right.
I am not playing this market that way or the real bull market that way. I'm looking at the money. But you asked, I'm throwing it out there. Solana, 1,000 easy. XRP, as hated or as loved as it is, because it's one or the other, nobody's in between except me. I give the XRP army hell. And even though I have it, like I have it. I think XRP does 4, potentially if the market goes nuts, potentially 8. But again, I'm not looking at that. Again, I'm going to be looking at the money, the FOMO money. I don't care whether it's at 4 or 375. When I see the FOMO volume, we will take action. And that action, again, I'm going to say, I'll give this out. The action is take some off the table and then protect the rest with stops at the very least. Like, that way you give yourself a chance to ride if things do go higher, but don't be stupid.
Yeah.
You know, don't be dumb thinking you're going to sell the top. Listen,
Yeah.
nobody sells the top. Nope, you ain't that good. You ain't that good. That's the first thing I tell them. Nobody sells the top. You're not that good. That ain't gonna happen. So
That's great advice.
Was there another coin? Did I hit all the coins for you?
Oh yeah. But no, Dan, that is great advice. And I hope the folks watching and listening are paying attention to that we have these price targets. Sure, we all in our mind, oh, we want this coin to get to this price, but you got to look at the metrics, the volume, like you're saying, that FOMO volume. You got to look at the charts, see what it's telling us, because you may have to exit earlier because we don't know what's going to happen.
Yeah, man, targets are for kicks and giggles, man. They're like armpits and buttholes. Everybody has a target. They all stink. All of them stink. They stink. So, to go in there relying on it, I'm just like, when there's a much better value to look at, the money flow, and that's volume, that for me is how I do it. There's more to it than that, but that pretty much sums it up, brother.
Dan, really great stuff. And we're going to have to do a part 2, I think, of this.
Love to.
But for today's episode, thank you so much. And I got some wrap-up questions here for you. First, if you could create your own metaverse, what would the theme be?
Metaverse. Wow.
What would you put your Oculus and Apple Pro then go to?
Fantasy, like medieval, Lord of the Rings, like, I know it's so nerdy, man. It's so nerdy. I'm into the C.S. Lewis, J.R.R. Tolkien, fantasy swords and wizards and all that good stuff. In 3rd grade, I read The Hobbit and I read it like 6 times. Like I was hooked. And I'm 50 and I'm still that little 3rd grader, man.
Oh yeah. I love that too. And rapid fire questions. First, favorite food.
So for me, it would definitely be steak. I'm a preemie carnivore, but God, I love pizza.
Favorite musician or band?
Oh yeah. Oh wow, that's tough because I love all genres. So, I'll just throw a couple out there. I could do, U2, Tupac, Eminem, to some country to, Linkin Park. Tough. That's a tough one. I love R&B. Like I love R&B, hip hop. Oh my gosh. Love 80s music. See, now you got me started. See, I pick a favorite.
I'm the same way. I listen to a variety of genres as well. Favorite movie?
Oh, wow. Goodness. Man, that is tough. I'd have to say, if I could pick a niche, I'd say sci-fi and fantasy, Lord of the Rings, Star Wars until Disney ruined it. Did I say that out loud? But yeah, stuff like that. I love sci-fi, like stuff like Dune, that kind of stuff. Hopefully that helps. Oh, and a couple other movies I love is Heat. I don't know how people have seen Heat. Heat is epic. It's one of my all-time epic favorites. Yeah.
Yeah, when it comes on TV, like I stop and I watch it, right? And my wife will usually be like, "Haven't you seen this like a million times?" Like, yeah, but it's good,
Yes,
you know?
it is. It is so good.
Favorite book.
Definitely would be the Bible. After that, it would be, and I would highly recommend for everyone to read it and give it to their kids. How to Win Friends and Influence People.
Mm, good
It's a
one.
life-changing book. I mean, it's incredible.
Mm. Yeah, I've read that, and that was recommended to me by some folks, mentors, about like 10 years ago, and it is pretty incredible. And when you're not working at 360 Trader, what are you doing for fun?
Oh yeah, man. I mean, I love to travel. Like I'm gone all the time. Bodybuilding, of course, most people know I'm into that, even though I don't compete. For me, it's art, man. It's never, what I love about it, it's not me against anybody. I don't mind competition. But for me, it's truly you against you. What are you capable of? What can you achieve at any age? So I would say like bodybuilding, I love food, good food. I'm a foodie. Yeah, so just whatever, man. Being outdoors, travel. I love to travel. Me and my wife, we love to travel, so we're gone a lot.
Nice.
Yeah, pretty easy.
Awesome. Dan, man, absolute pleasure. And I learned a lot from this, and truly, and I think the viewers and listeners will as well. And everyone, check out Dan's Twitter profile as well as the website. Dan, thank you so much, man.
Man, truly my pleasure, Tony. I'm humbled that you asked me to be on your show. I'd love to do a part two if you get time. Just let me know, man. I'll be down for it.